Japan tax for foreign e-commerce sellers. Understanding tax obligations in Japan can be complicated for foreign e-commerce sellers. A foreign e-commerce seller is a company or seller who is selling products or services to Japanese buyers who do not have a legal entity or company in Japan. The ownership of the product remains with the e-commerce seller until the product is sold to the buyer. This would include e-commerce sellers using third-party logistic and fulfillment centers in Japan, such as Amazon FBA or Rakuten. Japan has many taxes for a normal Japanese company. We will only discuss taxes that are related to foreign e-commerce sellers in this video. First, we will explain the three most common taxes: consumption tax, tariff tax, and profit tax. The main tax is called consumption tax. Consumption tax is charged on all transactions, foreign or domestic. The consumption tax in Japan is 10%. To help better understand consumption tax, we will divide it into two parts: import consumption tax and sales consumption tax. Japan import consumption is 10% of the price paid for the product coming from a seller outside of Japan to a buyer who will import the product into Japan. Tariff taxes are in addition to import consumption tax and are based on product, country, and trade agreement. However, most products are only subject to import consumption tax. Sales consumption tax is charged when a seller or company sells a product or service to a buyer. The sales consumption tax in Japan is 10%. Lastly, there is profit tax. Profit tax in Japan is 40%. Local Japanese companies must comply with import, sales, and profit tax. Sounds complicated, right? Well, it can be, but for a foreign e-commerce seller, Japan has simplified the process. At this time, there is no easy way for foreign e-commerce sellers to comply with import consumption tax or profit in Japan. To simplify the process, foreign e-commerce sellers have to only comply with sales consumption tax. How does it work? It's simple. When e-commerce sellers import their products into Japan, the e-commerce seller will pay their sales consumption tax at the port of entry. This means that your online selling price will equal your import declared value. You are not responsible for import tax, you are only paying your sales tax in advance to Japan. If your product is subject to a tariff tax, you will also pay that tax at the port of entry. That's it. Here are some of the most commonly asked questions about import as a foreign e-commerce seller. How does Japan Customs know what my selling price is online? Japan Customs and Tax use many digital tools to monitor e-commerce sellers. Foreign e-commerce sellers must submit supporting documentation called a Foreign Online Sellers Report with their import documents during the customer clearance process. Don't worry, COVUE IOR will ensure you are fully compliant and all documentation is correct before you ship. Can I lower my sales price to reduce the amount of sales tax I pay? Well, yes and no. Japan monitors online transactions. Your pricing must fall within the parameters of similar or same products being sold by other sellers. If your declared value is too low, your shipment will be selected for a fair market evaluation. Japan Customs will determine the correct declared value. Repeated evaluations can lead to future problems with Japan Customs, including being blocked from entry. What if I declare a higher selling price at import and then later lower my price for a sale? Can I claim back the overpaid tax? No. This is the risk you take entering as a foreign e-commerce seller. At COVUE, exceeding our customers' expectations is our #1 priority. We invite you to experience just how easy Japan market entry can be.